Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. This is the weekend edition. Today's show is about a magical market that doesn't exist in reality. It's the real estate market in the town of Springfield. Springfield, much like in the TV show The Simpsons, is virtually any town, and no town at the same time. This imaginary town of Springfield is an amazing place. It's one of the hottest real estate markets in the world. Investors have flocked to Springfield from all over the world. There's so many buyers and sellers. The rules in Springfield make it very quick and easy to buy and sell real estate. There's full transparency in the land title system, so title insurance isn't needed. Trades can happen in seconds. Sometimes the broker will buy the property themselves, simply to make the process of buying and selling more efficient. There's literally dozens of buyers with reserve bids, so the broker is not really taking any risk in facilitating the transaction. Brokers who facilitate transactions, they take a small commission in exchange for that service, and the broker is safe in knowing that there will be a buyer ready and waiting to purchase the property. We provide this market maker service to maintain market liquidity and gets rid of some of the inefficiency of the old-fashioned real estate market. It's an incredibly efficient system. Sometimes a single property can change hands multiple times in a single month. The tenants who live there, well, they're completely unaffected. They're even unaware that the property they live in has changed hands multiple times. They live their life and they pay their rent to the property manager just as always. The market analysts pay close attention to what's happening in Springfield. They look at the properties. If a tenant gets a few days behind in paying their cell phone bill, that could add some risk to the property because they might be late paying their rent. So the analysts adjust their estimate of the market value of the property in real time. It's common to see price adjustments of 2 or 3% in the value of a property in a single day. Some say that the real estate market in Springfield is a little too volatile. But hey, the benefits of having a very liquid market seem to outweigh the drawbacks of that volatility. There's so many people eyeing the Springfield market that we now have mutual funds investing in Springfield real estate. They buy and sell entire portfolios of properties. It's given rise to an entirely new set of problems. Each year, as people come close to the deadline for contributing to their retirement account, those mutual funds get a huge infusion of cash. The fund manager needs to put that money to work, so they go on a buying spree. The terms of their funds don't allow the money to sit in cash for very long in the bank, so it has to be deployed. And during those few weeks each year, we see a spike in prices. In the short term, there's a surplus of buyers and not that many sellers, so prices historically jump 10 to 15% in the span of a few weeks at the same time each year. Of course, the reverse has been known to happen as well. If there happen to be more sellers than buyers of the mutual funds, the fund manager has no choice but to sell properties in order to meet the redemption demands of the unit holders. That's forced some fund managers to sell at a time when they know it's going to create a loss. But their hands are tied. They don't have the latitude to exercise better judgment over the market conditions. Analysts have struggled to explain this behavior, so they've invented an entirely new language to describe the patterns of behavior. They no longer look at fundamental value of the properties, and they describe these price swings as technical buying. They've given the market a personality, kind of like a moody teenager. They explain the price swings during the morning trading session as market sentiment. There's so much money changing hands in the town of Springfield that it's created a need for additional financial products. The buyers of the properties negotiate options now to purchase with the property owners. The holders of these options have been known to buy and sell their options on a derivative market. In order to bring some order to the property market in Springfield, the government stepped in and they've created some rules. So now the trading is restricted to certain specific hours of the day from 9:30 in the morning until 4:30 in the afternoon. This allows the brokers to have a slightly more normal life. Before the opening bell, the options trading has continued overnight, and based on the values of the options, prices can also change from the closing bell the previous day and the opening bell in the next morning. In fact, with the advent of technology, it's been possible in recent years for software developers to create elaborate software systems to make property transactions even more efficient. The contracts are now executed by software programs without any human intervention. It's amazing. In recent years, as much as 80% of the property transactions in Springfield were initiated and executed by software programs with no human intervention. Now, some of the brokerage houses have invested millions of dollars trying to get their software systems to outsmart the software at the competing brokerage firms. On TV today, the news anchor on the financial news show was commenting on the morning's market activity. Prices across the board had fallen about 1%, and he said the Springfield market was grumpy this morning and shed 1% of its value. I thought it was a strange thing to say, but people around me seemed to be nodding approvingly as they planned their afternoon trades. So I let it go and I didn't ask any questions. Sounds like a pretty magical place. Wouldn't you like to live in a town like Springfield? Have an awesome rest of your day. Go make some great things happen. I'll talk to you again tomorrow.